In this video, we're discussing a high growth e-commerce stock that is definitely competing with Amazon and kind of a mini Amazon in the making. So you want to stick around for this. A lot of us were way too young when Amazon went public to invest in the stock market and invest in stocks like Amazon. And we can look back and look at Amazon and say that was a missed opportunity. I wish we were older and all this other stuff, but we can't change that. So let's get past that. Let's look at the future. Let's look at the stock we're talking about today, because this could be our opportunity to get into an Amazon-like business fairly early on. Now, there's a lot of great e-commerce type companies still in their early days, guys, out there in the world today. We have Coupang in South Korea. We have C Limited that's in Southeast Asia and expanding around the world now. And while these are both great companies, the ones I'm discussing today, I think, is probably the best when it comes to its current valuation and future potential. And actually, since I mentioned potential, this company is a lot more than just e-commerce. They do logistics, they do payments, they do loans, they do so much, and a lot of people consider this kind of like a Amazon, Square, PayPal, a lot of businesses in one, which is what makes it even more exciting. Mercado Libre, ticker symbol MELI, is the stock we're discussing today. And this company excites me because they dominate the South American market and is quite honestly undervalued in my opinion today. And I'll show you exactly why in this video. So go grab a cup of coffee, hit the like button, subscribe. This is going to be a fun video. As of recording, Mercado Libre is sitting under a $60 billion market cap, which I think is just an absolute gift for long-term investors looking for a dominant e-commerce play. In recent weeks, the stock has seen some aggressive selling, bringing it down around 50% from its highs of $2,000 per share, now sitting closer to $1,000 per share. I see this as a discount, as an opportunity as a long-term investor, and it's a stock that I haven't been tracking for too long, but you know, if I looked at this a few months ago, it would have been like, it's way too expensive. And now here we are in December and the stock is looking attractive. Sometimes you gotta be there, right place, right time, and if you miss the early days in this stock, this may be our next big opportunity. It's not every day that you see a 50% discount in a quality business that has decades of runway ahead of it. So when we get these small pockets of opportunity that the market presents us, we need to capitalize. So I mentioned that Mercado Libre is not just an e-commerce company. They do so much more than that. Here we can see their marketplace. This is their core. This is the e-commerce. And we can see that their performance broken down by regions include Argentina, Brazil, Mexico, and others. And while Q3 2020 saw massive year-over-year growth thanks to lockdowns and such, we are still seeing a relatively high growth here in Q3 2021, well into the double digits, with many markets in 30% plus growth. You can also see the 2-year compound annual growth under that, which is very strong across the board. Next is their logistics business, which is the backbone for the marketplace. And this is seeing strong operational performance with around 80% of all volume being delivered in 48 hours, which is a 21% improvement year over year. Now, as the company scales, they'll become more and more efficient, leading to more and more happier customers. Then we have payments, and this is another huge market. We can see that their digital wallet is growing customers rapidly with over 31 million unique active users on their fintech platform currently. South America is a tough market for fintech. So I researched this a little bit because I was like, why can't PayPal or Square or whoever just kind of go in there and just win the market? It's because in South America, a lot of people don't actually have bank accounts or have a spot that they put their money in. So it's very difficult for traditional US companies to understand that market and understand how to target those customers. Since Mercado Libre understands that market, they're from that market, that's their bread and butter, they are able to offer other services which gets people on their platform, and then they can kind of convert them to their fintech platform. And it's just a beautiful system that they have in place to just keep growing multiple parts of their business. This, in my opinion, gives them a huge advantage over competitors like Amazon, for example, or even C Limited, for example, because those companies are great, but South America is not their core market. And that's kind of ironic because, Amazon, South America, come on, you would think Anyways, so because of this, they're able to expand on their credits business as well, where the real opportunity is with them loaning out to merchants online and offline, similar to what Square does in the US. And as you can see here, this is growing well to hitting record highs this latest Q3. Growth, according to analysts here, is expected to still come in very strong next year against pretty tough comparables, in my opinion. So to see 36% growth expected next year is quite amazing, putting them close to $10 billion in revenue. It's also worth noting they're a very profitable business, going from around an EPS of 2.85 to around a 8.41 EPS expected next year. Absolute massive jump. So these are kind of the high level fundamentals of the business and the different segments of them. But let me show you a few more things here to give you full context to kind of help you understand why I think the stock is cheap today. Looking at their balance sheet, this company is cash rich with over $2.4 billion in cash, $2.2 billion in receivables, low goodwill, and $6.8 billion in total assets. Their liabilities sit with around $849 million of debt that's due soon, which they can cover pretty easily with their cash. And then you have around $2.2 billion of a long-term debt, which again can be covered. Total liability sits at around $6.6 billion, so slightly less than assets, which is acceptable for a company that needs to keep reinvesting in logistics, their network, and keep growing. They also did a $1.6 billion capital raise last month, which is not factored into this, which will help strengthen their cash position even more and help them reinvest into the company. Now, sometimes capital raises can be quite controversial. When companies do it near their 52-week lows, it's kind of seen as a position of weakness. With Mercado Libre, they did it in a position of strength, in my opinion, and it was a very smart decision for them to capitalize on their expensive stock price. For context, the shares were sold at $1,550 per share, which is well above where we're at today. It's also worth noting, guys, that Mercado Libre is free cash flow positive. They pull in a few $100 million in free cash flow every single year. So the health of the business, of them operating and keeping things running on their own, is still good. Okay, so now let's talk valuations on why this is cheap. Now, a great metric for Mercado Libre is enterprise value to revenue. And since this has been a public company since 2007, we got a ton of historical data to look through. We can see that the red line that I've drawn here shows a base that this company has bounced off of in the past over the last decade. And every time we've come down here, investors have found value and it got bought back up and provided great returns. Right now, we're sitting at this level once again after the 2020 stock boom that we saw, and this is a sign that there's a value to be had in Mercado Libre. Can it go lower? Sure, but if history tells us anything, the current EV to revenue multiple of around 7 has historically been a strong base for the stock. Think of it this way, we are currently trading at a cheaper valuation than what we were at prior to March 2020 when everything hit the fan. Yet, during this time, the business has become so much more efficient, so much more attractive, and just so much better in every way. Also, when we compare it to one of its closest rivals and peers, C Limited, we can see that it is trading quite a bit cheaper here as well. So all signs to me are pointing to a company that has strong fundamentals, improving fundamentals, things growing and moving in the right direction. But the stock price seems to be broken right now, and that is an opportunity for me. From a technical perspective as well, we can see that we seem to have found support on the 50 moving average on the monthly chart, while being extremely oversold to levels that we haven't seen in many years. So is the market being irrational here with Mercado Libre? I would say yes, most likely, and I think this is one of those buy the dip opportunities. It doesn't mean that the stock can't go lower here in the short term. It doesn't mean that we can't see sub $1,000 per share prices. That's possible, who knows? We can't predict things in the short term. But if history tells us anything, and valuations tell us anything, and growth metrics tell us anything, Mercado Libre is at a point historically where investors found value. Also thinking big picture, in a few years, I think this company can easily be a few $100 billion. So today at under a $60 billion market cap, that could be a 2 to 3x return in no time if this company keeps executing, which I think it will. I think this is probably one of those compounding type stocks which just keeps growing time and time again, and just keeps executing, keeps doing well, keeps pleasing investors. And you have short opportunities where it dips a little bit, and that's when you buy some more. I love those kind of stocks. I think Mercado Libre fits perfectly in with that. Also keep in mind this company is riding some major tailwinds, e-commerce being one, fintech being another one, and they're dominant in both of those in South America. So this company has a lot of room to keep growing. You also get a company that's kind of diversified outside the US if that's something you're looking for. I never really considered South America as an opportunity market before, but hey, this company's showing us that there is a lot of opportunity there. So you know what, I'll join in on the ride. Also worth noting is that their CEO actually studied in the US, so he's very familiar with Amazon, kind of Amazon's model and how US companies operate. And he's kind of taken that and build Mercado Libre, but the advantage that he has that he's from South America, he understands that market and he can capitalize on that, and he has been here by beating out the competition, including our beloved Amazon. But guys, remember this e-commerce play, it's not like a winner takes all like we have in the US. I think the US is kind of an exception because in most markets we have a couple of big players that have a good piece of the pie, and I think that Mercado Libre will be dominant in South America. They may even expand to like Africa or Asia at some point, grow their market some more. C Limited is going to be a big one. Coupang's probably going to be a big one. Alibaba, of course, is a big one. There's a lot of big e-commerce companies, and this sector is just going to keep growing over this next decade, in my opinion. So you definitely want to consider getting in for that ride. I have a few positions in some of the stocks that I mentioned, and I don't plan to sell those for many, many years. So I hope this video provided you some insight and kind of intrigued you a little bit to go research Mercado Libre some more. Guys, if you have any questions, comment down below. I'd be happy to answer them if I can. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.